Hey, what's up, everybody? This is Evan Carthy from evancarthy.com, and it is September 14th. The markets, the main open hours are now closed. In about another 24 minutes, they'll close for an hour, then open back up. So today, there is nothing major that happened, unlike yesterday, where you can see from right over here, pretty much right before the markets open, hour before, just had a huge sell-off down there. And today, it's just been jostling around. Now, intraday for the SP500, there were two trades for it. Let me show you here real quick using the red dot right here, red dot down there, and red dot right there. Those are just the semaphore pivot points algorithm indicator for it. So as you can see, price broke out right there, or excuse me, right there. That's where price broke out, and that initiated the trade to the downside where the green line right there, which is the 1.618 channel for the inside pitchfork, which is what I use. That would have been the exit right there. You can see when it gets a little bit, never broke this previous high. If it does break the previous high right over there, then the exit goes down to where it initially broke out. I always draw a black line right there, and that would have been the exit. But since it did not, it remained the exit down there. It came down and hit it real easily, so that trade was dead and done. Then there's one other one here right before or pretty close to market closing. You do red, and you can do the white one, because how it works is the red dots, these are the primary ones, the white dots are the secondary. So in order to have a red dot, you have to have a white dot to make it up, but in order to have a white dot, you do not have to have a red dot. So you can go like red, white, red, 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 but what you can't do is like red, white, and then red, because there's other whites and reds in them, something like that. So as long as you have basically three whites connecting somewhere, that's how you can do it. Or if it's three reds only, then you can do three reds. And the primary ones are three reds, so those are going to give you typically the better, more concise setups. But as you can see down here, price broke out, and then just powered right on through it for right there. So those are the two main trades today for the SP500 for that one. Looking a little bit more of the long-term trades set up over here. I believe it's the hourly chart. Let me see here. Yeah. So, and also I moved the contracts over to the December contract. You see up here. Yesterday I had the September ending, I believe those closed this Friday, so I went ahead and moved it over to the December contracts. So with that being said, you can see a red dot around here, down there, one right there, and then one right there. So actually yesterday, there was a long setup that initiated within it for the S&P 500 before you had that huge sell-off right over there. You can see this is where it broke out right over here, so that's the initial one. So currently the exit for it is the green line right up here. You can see it's going from the top left to kind of bottom right corner over there. So that is the exit wherever it ends up. But if the price does close below the red dot right here, so about 3898.25, the next will move to where it initially broke out at the black line right there. So, it's a decent risk reward right here, even though it's trading on hourly chart. So for something like this, I typically look at options rather than doing a futures contract for it right there. So that's the S&P 500 tomorrow. There's nothing really as far as the MFI, which is MFI Money Flow Index, which is why I look to see if things are overbought or oversold. You see yesterday before we had a big sell-off, it was way overbought. It's not in the oversold territory yet in the 4-hour or in the daily chart, so it's kind of like in the middle of nowhere. So tomorrow, just looking for, not sure which way the market's going to go. You see here in the 5-minute chart is where we're sold. I don't even look at that because it is so much variance here in the 5-minute chart. I'll look at the 4-hour and the daily. It's closer down here to being oversold. So that's what I would like to see it do on the 4-hour chart, is maybe get another down day, or at least enough of a push down tomorrow to get it in that oversold territory. So then a buy right here would look a whole lot more appetizing. Real quickly over here, moving on to the Russell 2000 market, which is a really good market I like to trade using the 15-minute chart. And again, I rolled over this contract to the December contracts, or moved it over December, didn't roll it over. You can see the red dot right here, red dot right there, red dot right there. So we had a short setup where it initiated when price closed below the line right there, And so right now we're looking at the green line being the exit that we're looking for, the downside for it. Now if price does continue to move up, goes above the red dot right over there, then the exit would be where it broke out, which would be moving it to right about there. I'm not currently in this trade. I would like to see, if I'm going to get in, I want to see the price move up about right in here. Then I would look to get in this trade, just because if it does break up. I can still use the exit down over here, but I just prefer to play it safe and use it where price broke out of it right there, because you can see it run quite a ways away from you before it decides to come back. And then lastly, looking at oil here real quick, again using the 15-minute charts. This is the November contract for the micro crude oil futures contracts. Use the red dots. There's red dot, red dot, red dot. We see price broke out down right here. That is the exit we're looking for down the green, but price did break the previous high right over here. So when that happened, the exit for me is going to be the black line right here. So still some good movement left down the downside. So you take the X right there where price currently is about 290 ticks, almost $2.90 for the contract. Now this doesn't mean that price is definitely going to go down. It still could continue to go up and against you, but from what I've seen, eventually it will come down and hit where the initial breakout was for it. So right now is a good risk reward ratio to getting in for the crude oil futures contracts, one that I'm actually in right now. And looking at the oversold, overbought indicators for it, you see it's just coming off being overbought right here. Hasn't made it down to the oversold level in the 4-hour chart, and then on the daily chart, it's in the middle of no man's land right here. So could go either direction for crude oil tomorrow. So those are the main charts right here. Looking at there's nothing going on right here, 15-minute chart, or in the 5-hour chart for the Dow Jones. So tomorrow, the market could be another choppy market again tomorrow, but if the price does for the SP500 close below or get below this red dot right there, I'll be looking to go long in this market right here for the SP500. So those are the trades from today, what I'm looking for moving forward. Have a good one. Take care. Bye.